This one stock can change early buyers' lives. I'm not a financial advisor, but financial advisors might say to buy as much as possible before November 29th. The company is Monster Energy, ticker symbol MNST. And if you're not a Monster drinker, you haven't seen it in a store, you've heard of Red Bull. They're like Red Bull. Tastes a little different. So the energy drink category is up 10% compounded annual growth rate for the next, 10 years. That's the projections. I'm not an energy drink drinker. I've tried them, but a lot of people are, and they help get people through the day. So it's crazy to say, but one of the best performing stocks in the last couple of decades is Monster, right next to Domino's Pizza. So people love vices. I love vices. I like pizza. And right now, this company has $2 billion in net sales, partially driven by strength in sugar-free and low sugar Monster versions. I don't know what they're called. Someone can tell me in the comments. I'm sure they have a cool name or something. So let's jump into a little breakdown on Monster. Why now is the time to buy this? Coca-Cola's up slightly right now as well. And a little bit about Q3 earnings. It's not financial advice. I'm not a financial advisor.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is Monster. This is kind of what they're up to. This is something I was a little bit worried about is other competitors. You look at Celsius. Celsius has been advertised a lot online. It's a big hit. If you look into stores, you'll see Celsius. I swear, as soon as I said it, now you'll start to notice it. There are other ones that are kind of online marketed and grown. But they have the distribution that these other companies, I haven't seen them in gas stations. I don't think that's going to change anytime soon. So they are focusing on low sugar. There are some wellness oriented health energy type drinks, but it doesn't seem like that's a problem right now in terms of how much they're selling. I mean, 2 billion is no joke. They have a serious brand. They have a whole marketing engine partnering with action sports athletes, and they're around the globe. So they actually acquired one of these competitors. This is a pretty big competitor too. I can't really say exactly how good the product like I said, but I do know that it definitely gets people through work, through school. And here's actually the name for the sugar-free line, which is a cutesy name. So here's the company, Monster. And if we look at the actual stock chart, it looks excellent. There's the earnings most recently, a little beat. This is what I'm talking about over the last 20 years. Absolutely crazy growth. This is like an NVIDIA type move, right? But almost even more interesting that it doesn't really have many sell-off periods. This is COVID, right? No sell-off basically during COVID because they sell energy drinks, so you can still, I guess, walk into a gas station and buy them. I mean, this barely didn't move at all. It's crazy. Essential workers were buying a lot of them. I'm not going to speculate on that, but 2022, when the market went down, this company just went sideways. It didn't go down much. And then sure, it did get hit a little in 2024, but it didn't have any problems with tariffs. So it basically is like some type of fantasy stock. And just to put it next to Domino's also with a crazy run. Did have a little bit of pullback in 2022 with the rest of the market, but that's sort of what you'd expect. I mean, like NVIDIA is just insane, but everyone is looking at NVIDIA and saying, okay, there are definitely periods where stocks go down. This is 2022. So to see Monster just look so strong is crazy. Is this going to happen forever? No. but that's why we use levels, right? So you can buy it off of this 72 level, look for a move up to 80 or so. And if it sells off, it sells off. But Coca-Cola seems to be doing well recently. Some volume coming in there. As far as food in general, it's not doing great, I don't think. Shake Shack's down. Eat okay, but down for a while. So energy drinks, I mean, that's a good business. So here's the deal. This is a problem, right? Store traffic declines. People just aren't going out and buying things as much anymore, except for they're buying food. They go to restaurants, but they always have to get gas too. So this seems like this is likely to hold up, but it's something to be aware of. I'm sure you can buy them on Amazon and have them shipped to your door. I don't know if there'll be any crackdown on basically sugary and caffeine drinks, but we'll see. Anything could happen with this administration. And here's that growth. Coca-Cola had some revenue growth in Q3, so that's positive for the beverage space in general. Celsius had a large increase. That's that competitor I was talking about earlier that has that big online presence. 700 million revenue in Q3, so that's a big deal. Looks like they had a little bit of a distributor situation, but definitely holding up. Let's look at that ticker just to make sure we're on the same page here. Okay, so that distribution payment definitely wrecked this company. It sort of reminds me of Meta's one-time 15 billion hit. I mean, that's down a lot too. So not the best earnings, but fortunately we can see that this move is based off of earnings. It's not the stock or the sector itself looking weak. So that's good to be aware of. And then Keurig Dr. Pepper, one other competitor just to be aware of, seems to be doing well. Revenue up 10%. And they acquired an energy drink company. So that's makes them a little bit closer to Monster. So if we look at how they're doing, looks like the earnings was kind of a nothing burger. I don't know what this is, but this is definitely not related to Monster or the category. This was 6 months ago. So Monster looks good. That's the idea. If you like these ideas, hit that like. If you want a free course, hit that subscribe. And if you want one-on-one help, go to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.